Good morning. This is Eric Brotman from BFG Financial Advisors. I am here with Jamie Mendelson from the Asher Group. We are back by popular demand. This is the first time we've been doing webinars for years. It's the first time we've ever done a webinar a second time. And as I was telling Jamie before we went live, this is because everyone wants a little more Jamie in their lives. So our topic today is putting the life in life insurance, how and why to use your policy while living, and sort of why don't we call it death insurance? Jamie, why don't you do a quick introduction so folks know who they're hearing from, backed by popular demand?
All right. Well, Eric, great to be here in audience. It's wonderful to have the opportunity to speak with you again. I am a subject matter expert in the life settlement field as well as life insurance valuations. My family owns Asher Group. We've been in business for over 2 decades, helping policy owners and their advisors value their existing life insurance policy. So I don't sell product, I don't do investments all day, every day. I'm working with advisors like Eric and those of you on the call to help them better understand their existing life insurance and not just how it's performing, but also its fair market value. So excited to speak with all of you today. Always fun to speak with Eric as well. So looking forward to it.
Well, and in case most of our audience today, we've got a lot of people who signed up for this. It's very exciting. So we'll just remind everybody that Hannah Dennis is in the background. There's a chat box on the right of your screen. If you have questions, you can plug them in at any point. Hannah will choose when and if to interrupt us mid sentence, I think, or mid slide, or we'll hold them to the end, depending on the topics and what comes in. But please do ask some questions. We'd love this to be interactive. And in case this is mostly being attended by Jamie's fan club, I'll introduce myself. Eric Brotman, CEO of BFG Financial Advisors in suburban Maryland, have been in the financial arena for 32 years and started this company 23 years ago. And I'm trying to create financial literacy education and hopefully edutainment. This will not be boring today, I promise, despite the fact that life insurance is in the title. And we're just trying to help people make some decisions that maybe they don't know about. So let's dig in, and I'm going to ask this question first and foremost: why is it called life insurance? We have clients who do refer to their life insurance as death insurance, which is kind of funny because there's very few things that are guaranteed in this life, and one of them is death, of course. But it's called life insurance, I think, because it does have a living benefit. There is a reason and a way to use this asset while we're alive. And so it's not really designed to insure against our death. Nothing insures against that. It's to ensure the human life value that we have, as earning people, as parents or grandparents, as business partners, and as all the roles we play in life. Jamie, why do you think they call it life insurance?
Because I think it's protecting, people's life, their livelihood, the protection opportunities that life insurance holds, the ability, for certain products to, create wealth, cash accumulation products I know you're quite familiar with. It really helps us, I think, focus on, living our lives, having that extra protection as well, so,
So
yeah.
if you're planning to skydive, make sure you have life insurance in place first before you do anything crazy. Let's talk a little bit about the difference between buying and renting life insurance, because life insurance is an asset. It is an asset, and we're going to talk a little more today about how it needs to be managed. You don't just buy it and stick it in a drawer. But there are essentially, with all the different types of products and all the marketing and all the nomenclature and all the things out there in the world, at the end of the day, life insurance is really one of two types. Think of it as ice cream versus yogurt, and then there's lots of flavors. You have term insurance, and you have insurance that's designed or capable of being permanent insurance, where term insurance is it's rent. And you are essentially in a position to rent that life insurance for a period of years, whether it's 1 year or whether it's up to 30 years, where you can essentially guarantee coverage for a period of time, after which typically it will either expire or get so expensive that you let it expire. But it does serve a need. It is less expensive than buying life insurance because it's not guaranteed to pay a claim. At the end of the day, an insurance company is writing 20-year term on somebody because they expect you to live longer than that, and most people will. And that's sort of how the underwriting works. Buying life insurance is different. It is saying there will be a claim when I die if we do it properly. And so now it's about return on investments, tax strategies, potentially asset shifting, philanthropy. There's so many different things. So, in buying and renting, Jamie, does it matter to you whether someone has term insurance and they're renting, or whether they have permanent insurance that they've bought in terms of monetizing that during their lifetime? Is there a material difference?
The quality of the product is very important when it comes to exploring the life settlement option as a solution for policy owners. But term policies, universal life policies, especially term that's actually convertible to a permanent product. So going from renting to the buying approach that you reference, those are the most attractive policies for sale. There's all different types of products, but both the term and the permanent universal life products are all viable for sale in the life settlement market that we'll talk about, pardon me, as we continue.
So let me ask you a pointed question.
Sure.
Term insurance is so much less expensive than permanent insurance. So why? Why would you own this? Why is this something that we want to own? And why is it, why should it be managed?
Yeah, and I think life insurance, similar to other property that we all own, is something that we have to pay attention to. Many of the advisors and clients that we partner with have a portfolio of life insurance, so all different types of products. So some that they approach with the rent philosophy, others the buy philosophy. So I think what's most important for your viewership to take away from this discussion today is that they should pay attention to their life insurance. Life insurance is an asset that you can't just buy and put in a drawer and forget about. It is something that needs to be managed. It is something that should be looked at every year or every few years when you're exploring and analyzing your planning. I think all of us, as we age, as our families grow, as our businesses grow, as our needs, wants change, as tax liabilities evolve, life insurance is something that can help protect some of those different areas of our life. So, paying attention to it, whether it's term, whether it's universal life, is something that I'm hoping all of us take away from this discussion today. And it's something to pay attention to because it can have significant value outside of that death protection that we started off discussing.
So I'm going to let everybody in on a little secret. I feel like it's the right time for this. My folks bought life insurance for me when I was about 14 years old. And they didn't do it hoping to file a claim. That's creepy and uncomfortable. But they did it because they wanted some property that ultimately I could own. And I've done the same thing for my daughter now. But I used my life insurance as the down payment for my first home in 1995. And I used it as collateral to start this business in 2003 when no bank would lend to me. So arguably, I've used my life insurance over and over again during my lifetime, and it has created opportunities to build wealth that didn't exist in any other way. I could not have bought that house without utilizing the life insurance to do it. And when I ultimately sold that property for a whole lot more than I bought it for, you can trace that back to the fact that without that life insurance that my parents bought for me when I was 14, it may not have happened. Same thing's true with the company. I would have had to borrow against credit cards and other onerous ways to do this. And we may not either A, have been able to be successful, or B, I may not have launched in the first place because that's a scary proposition to borrow a lot of money at 17 or 18% when you have other assets. So um, the life insurance has made more of a difference in my financial life probably than anything else I've ever owned, because both the house and the company, which of course one house, you then buy another one, and you sort of roll that equity, and the company has grown. Nothing has created more of an asset for me on the balance sheet personally than life insurance. And this feels like a secret because people they don't know. But I'm excited to talk about, in a lot of different ways, the reasons to own and to manage a life insurance policy. There are so many. And, for me, it was creating some tax benefit. It's creating some liquidity. We've got we have life insurance trusts that get used to get some assets outside of our taxable estate because we live in a state that likes to tax everything but oxygen. So we have to be real careful with how we own various assets. What are some other things? What are some other things we might manage this for, and in what ways, Jan?
Well, and I think, you bring up great points. My parents also bought, me life insurance when I was a
Mm,
child, and for
mm,
me, it's actually the only insurance I've ever qualified for. So outside of just this cash
mm,
accumulation or ability to maybe loan against existing coverage, protecting insurability for those of you
mhm.
listening today that have the opportunity and can afford life insurance on your children, that opportunity to protect their insurability while they're healthy. I'm um, in my late 40s. I haven't been insurable since I was 22. So just to bring that up as well, I think there's the cash
Mm.
accumulation, the wealth protection aspect. I will say, my brother looked at his insurance, and it gave him comfort when he was going through a significant illness to know that he had that protection for his family, making sure that they would be able to stay in school, live in their home, having that life insurance in place. So there's lots of different reasons why I think policy owners purchase life insurance, whether it's estate protection, wealth protection, for their business, might be their charitable wants and needs, this ability to leverage the premium dollars, the larger death benefit, and to give to organizations that are important to them. In my practice in the life settlement business that my family owns and works with clients all over the country, many times we're seeing policies after those protection needs have changed. Clients' ability or desire to fund life insurance has changed. But I think, to your point, all of the different items that are on the screen right now, different financial transitions, owning companies, selling companies, working, retiring, life events that happen, divorce, bankruptcy, changes in health. Life insurance can be an important asset to help support those changes or fund different planning needs. So there's lots of different ways that life insurance can be purchased, types of policies that can be purchased, and there's ways that it can serve all of us individually or as a business or for trust or for charitable ones. So lots of purposes it can serve.
So we've done a number of webinars here at BFG on philanthropy. We've done them with local high schools, local colleges. We've done them with other medical organizations and other places to help figure out how planned giving can be such a vital part of a charity's plan. And, what I find is while life insurance can be a great gift to charity, it's also an incredible tool for wealth replacement. Because if you have life insurance that you can leave to your children tax free, you can leave your IRA to charity and not pay the income taxes on it and not have your kids pay the income taxes on it. So there's so many different ways to utilize life insurance, whether it is the gift or whether it is the asset that you need or whether it replaces one you then no longer need. So many cool opportunities with it, and something to think about. So while we're living, I already talked a little bit about, the down payment for a home, and I want to talk about the mechanics of this. Some of the different ways that we can use life insurance while we're living. One of them is a lot of life insurance policies today are drafted in such a way where you can spend your own death benefit essentially on long-term care for yourself,
That's
which is a really big deal. What's more expensive than, the last 1, 2, 3 years of your life, particularly if there's memory care or other things involved? It's wickedly expensive. And if you can utilize some of your own death benefit for that, that's a big deal. And it does create money where maybe it didn't exist before, which is especially important when you have two spouses, one of whom is sick and one of whom is well, because you don't want to bankrupt your healthy spouse for your own care typically. Another thing you can do is you can use life insurance as collateral. So, yes, permanent policies may have cash value. And if they have cash value, there may be loan provisions where you can borrow from that cash value. And usually that's at a stated interest rate. And there's pros and cons to using it that way. But you can also set up lines of credit using the cash value as the collateral. So just like you might have a home equity line of credit or a securities backed line of credit, you can have an insurance backed line of credit. And I'm a huge fan because it creates capital where you need it. It might be, for example, that you're looking to sell your home. Maybe you're downsizing, or maybe you're moving on to the next home, or maybe you're looking at a second home. But whatever it is, if you're buying a piece of real estate and you have to sell one first, sometimes it's really hard to time that so that you're selling a property and buying a property simultaneously. Sometimes it's great to be able to use a line of credit to buy the new property and then be able to sell the other one without it being a fire sale and having to rush so that you can get the right deal for that piece of real estate. That's just one example. What other ways can you use a policy while you're living, Jamie? I don't think I hit them all.
Well, you hit a lot of them, and I think, for me, listening to you, I realize again the importance of thinking about life insurance as an asset, treating it like property. This opportunity to see the value of a life insurance policy, not just for its death benefit, but
Mhm.
its ability to use as leverage, to have the cash accumulation, being able to actually access that cash or build cash in what many times I would say is a tax-free environment. So life insurance, again, a very powerful asset. Speaking with advisors and policy owners around the country, having diversification within the portfolios so that the life insurance can potentially assist, meet, take care of a lot of different planning needs can be quite impactful. The ability, again, to loan from it, leverage it, being able to use it as collateral for different situations. I think the long-term care, blended products are quite, powerful as well. There's even policies that have a charitable rider to them, as you speak about your clients and your philanthropic, wants, needs, and desires to serve. So there's lots of different products that are out there. Working with an informed, advisor, partner in that area can be quite meaningful. The power of the life insurance policy isn't just the death benefit, but it's those uses. And also I would say it's assignability, which is an area that, our firm focuses on. The ability again to I like your title slide, put the life back in life insurance where it can really create capital events and opportunities today versus having to be an angel looking down to see the impact of a life insurance policy.
Well, and we're going to go through some details there because people definitely don't know that that exists. And I think it's really important that they do. And so here it is. How do you get rid of it? This isn't like a timeshare where you're stuck forever. That's like the Roach Motel of assets. You own a timeshare, you die with it, your kids have to have it, your grandkids have to have it. That timeshare is around your neck like an albatross forever. Life insurance is very, very different. There's lots of ways to get rid of it. With term insurance, it's very simple. You don't pay a premium and they cancel your rent. Essentially, that's very simple. That's usually not a smart idea because there are ways, particularly as you get older, there are ways to utilize it so that you don't walk away with nothing. But that is one way. With permanent insurance, you can surrender it. Now, surrendering a life insurance policy is one of the few ways I know of to take one of the most tax favored, if not tax free products on the planet and making a taxable event out of it. Like that is not a win. There are ways to reduce the life insurance so that your premiums stop. There are ways to you can gift that life insurance. You can assign it, as we talked about. You can sell it, which we're going to talk about. There are lots of different ways to get rid of it. Almost in every case, the best way to get rid of it is not to ignore it and let it lapse. There are problems when that happens, sometimes tax issues, sometimes just wasted opportunities. How else do you get rid of a life insurance product that you either don't need or don't want anymore?
Yeah, I mean, I think there's various exit strategies that you referenced. I think the most familiar to many of your viewers are going to be the option of surrender, which you touched on, giving it back to the carrier for whatever price they deem it should be worth. There's lapse where it just terminates, runs out of cash, runs out of premium. You could also consider a reduction in face, meaning change the death benefit. So minimize the face amount of the policy. I've seen some clients do some type of, and you're more familiar with it than I, some type of like 1035 type exchange, taking one policy, exchanging it for another. So there's various ways to exit the policy. The one that I specialize in is this opportunity instead of surrender or lapsing the policy to actually have the opportunity to sell it to an institutional buyer. So the same way you can sell real estate, art, jewelry in a secondary market, you can actually do that with your existing life insurance. And that's what a life settlement is by definition. It's the sale of an existing life insurance policy for an amount greater than the surrender value, but less than the death benefit.
That's I'm glad you brought up the exchange too, because I that is something people don't often think
Yeah.
about. A lot of people think about 1031 exchanges of real estate, but they don't realize that there are 1035 exchanges available also for life insurance vehicles that can either be moved from one life insurance contract to another, or from a life insurance contract to an annuity under certain circumstances,
Mhm.
and things that you can do to preserve your tax deferral, if not your tax-free opportunity. So a lot to think about. Great insights. So let's talk about the misconceptions. And first of all, in order to have a misconception for a life settlement, you have to know what it is. Now, you just mentioned that a life settlement is the ability to sell a life insurance policy that you own for more than the cash value, but less than the death benefit, i.e., there's some sharing, some arbitrage there. Um, and in order to have a misconception, you have to know what that is. So let's start with that. And then, of course, the misconceptions that I think of is, oh my gosh, I'm selling this policy. Now someone has a vested interest in my demise, and therefore I have to watch everything I do and look over my shoulder, and I'm a target now. That is simply not the case, though it does sound a little uncomfortable. It's just not true. Can you talk a little bit about that?
Sure. So the life settlement market is a highly regulated marketplace. The life settlement transaction is regulated by departments of insurance and financial services around the country. So lots of oversight. The IRS actually has revenue rulings associated with the transaction. So this is a transaction that's available throughout the entire country. Usually, the insureds have to be U.S. citizens, have a social security number, have to reside in the US for more than 6 months out of the year. However, there's some exceptions to that. I think that sometimes there's confusion with life insurance and the life settlement option. I think to your point is people don't really understand how another party can own their life insurance. So I'll sometimes compare it to maybe donating life insurance. We touched on that earlier. The power of a life insurance policy can help with people's philanthropic wants and desires. So when you think about the life settlement option, the same way you could gift your life insurance policy to a foundation, to a nonprofit, you could give it away. Instead of giving it away, there's actually large institutions, private equity, hedge funds, pension funds that will purchase the policy for that amount, and I think we've got the definition on the next slide, but, will purchase the policy for an amount greater than the surrender value, but less than the death benefit. So your life insurance is a very powerful, asset piece of property that you have, this opportunity to take something that many people think of as illiquid, right? It was purchased to many cases for a protection need, that it can be immediately used to create a lump sum for other planning. So, when you think about confusions about the market, a lot of times we hear, to your point, concerns about another party owning the life insurance. And I usually will explain it that these are very large institutions, the same way you think of, a private equity or hedge fund or pension fund building a portfolio of real estate and investing in REITs and building REITs, right? Real estate portfolios. These large institutions are building life settlement portfolios. So, um, the opportunity for policy owners in a safe, regulated environment to monetize their life insurance to help serve other planning needs exists. People can feel confident in that. We've been in this space again since 2003, more than 2 decades, serving policy owners.
It's nice that you started in '03 and BFG started in '03. I feel like we grew up together, Jamie. It's good stuff. And you nailed it with the definition of this. I think it's a little bit akin to where mortgages are bought and sold. You borrow money from XYZ bank to buy your home, and then 2 years later you get a letter saying, "Hey, welcome to ABC Bank. We just bought your mortgage from XYZ Bank." And the transaction doesn't impact you as the homeowner. It just means you're writing a check to somebody different. I think this is a little bit akin to that, where it does get pooled, and it can be sold, and I would think within those hedge funds can be resold too. I'm sure that's commoditized as something that can be packaged and sold between parties, and as long as it's within the regulatory landscape, that's okay.
Yeah,
Okay.
you're right.
Uh, Wow, I love when I'm right. It doesn't happen at
Yes.
home, so I'm glad it can happen at work sometimes. So, common questions about life insurance from policy owners. I'm going to let you go first. What are some common questions that you hear sometimes?
I think a lot of policy owners, when they're looking at their life insurance, let's kind of set the life settlement option aside, but looking at their life insurance are asking questions like, do I still need it? Why is my premium increasing? How much longer do I have to pay? What's the purpose? Does the need still exist? I think we see in our practice a lot of clients that purchase the life insurance for a particular reason. They might have purchased it 10 years ago, 20 years ago, 30 years ago, and they're evaluating, their need for it today. That is
Mhm.
something that I do like to remind people on. When you're looking at your life insurance, asking yourself those questions. Would you buy it today? Does the need still exist? I think those are important questions for people to ask themselves or companies, et cetera. Because sometimes you buy the life insurance, it served its purpose. Why keep funding it? Unless,
Mhm.
it might be one of those cash accumulation policies or one that has a long term care rider that might serve another purpose for the owner as well.
So I agree with you that sometimes the need goes away, but there's still a want. I mean, this is still an asset. None of us need a vacation home, but some of us want one. Well, if you bought the life insurance because there was an acute need, there was you had 3 children, or you were starting a business and you had business liabilities, or whatever it is. If the need ceases to exist, then you have to figure out, is this property I still want to own, or what's the best way to get rid of it? Another common question that I get, and forgive me for being flip, but it's, what the heck do I own? Like, let's start at the beginning. People rarely buy life insurance. Life insurance is usually an asset that is sold, not bought. And what I mean by that is that usually there's a life insurance agent or somebody who's encouraging people to make a purchase. People don't usually wake up in the morning and go, you know what? I think today I'm going to look at some life insurance. Like that it's more or less you're working with a financial advisor or an attorney or an accountant or an insurance agent, and they say, you ought to update this, or you ought to get some life insurance. So when that happens, consumers don't know what they're buying. They really don't understand it. And the life insurance industry has done, I think, a disservice to people by having policies that are 100 and 200 pages long, because you can't understand them. The layperson can't understand them any more than a prospectus for an ETF or mutual fund or something. So, understanding the different types of insurances, the way they work, and managing them regularly so that they don't implode. And unfortunately, the horror stories are significant, where you hear somebody who's been paying into something for 35 years and now there's no cash because it wasn't managed and it's going to disappear. And oh, by the way, potentially be a taxable event. Like, it's just a total disaster. So I think the first question to ask is, what do I own already? What do I have access to? What already exists? What are my rights under these policies? Is this term that's convertible or not? Is
Mhm.
this a policy that's gonna expire before I do, or will it pay a claim if I live to be 106?
Yep.
All those various things, and so I think a lot of the common questions are, "What did I buy in 1988? What was this? And is it still good?" So
And I
just
think to oh, sorry, Eric. I was gonna say, and I think to your point, a recommendation that I make around the country when I'm speaking at different conferences is working with advisors and their policy owners to ensure that they know what the future premium costs look like. Run an illustration or a ledger every few years to maturity so that policy owners that if you're a policy owner on the call, or you're managing maybe a trust that has a policy in it that you have some type of duty to, that you know what the future obligations are. There's very few life insurance policies that are sold that are what I would call paid up, where there's not this future obligation of premium that's going to be due at some point. And I think being aware of that is very important. To your comment a moment ago, term insurance, one of the powerful aspects of term insurance is its convertibility to a permanent product. This ability to protect the insurability and the rating class on the term policy from when it was sold, meaning someone was maybe healthy when they bought the term policy. They were, 45 and healthy. They've had a change of health. They had a 25-year term or a 30-year term. Um, Time, but they had a change in health. Many of those term policies have something called a conversion right, a conversion
Mhm.
to a permanent product but that has different um, time frames within each policy of when that's available. So knowing the conversion rate, when it expires, noting things
Yep.
like that for your clients or for yourself can be very important. So, you have some of the questions we talked about earlier on the screen also. And I think it all comes down to asking questions. Even the life insurance specialist that I work with will look at the number of policies, products, carrier options that exist today, and there'll be confusion. So, as a policy owner, for all your viewers, I would say don't be afraid to ask questions. Don't be afraid to share what your concerns are. And try and get an answer from someone, whether it's your advisor, whether it's the actual carrier that's on the property that you bought, one of the big names within the insurance world. You should have the answers to what your questions are, and there's someone or some party that will be able to help you get those answers.
So you mentioned convertibility of term. And sometimes term insurance, because it's rent, people think I should just get the cheapest thing I can find. And the challenge with that is maybe the reason it's less expensive is because it's not convertible, or it's only convertible for the first 5 years, and the next 15 you're stuck with it and it's gone. So understanding the literal fine print of how these work, how long is it a convertible, to what is it convertible? The challenge is insurance companies will issue these policies with the ability to convert to whatever product line they have at the time you're looking to convert. Well, that means you want to be with a reputable enough carrier that they're likely to A, still be writing new business, and B, to have a product line where you can choose something appropriate and it's not one size fits all. Because, like anything else, one size never fits all. Not that I want to get graphic, but I'm picturing, like, a hospital gown. It is one size fits all. It's not flattering. I just thought I'd say that. All right. So we talked about the confusion. There are some life insurance policies out there, and we see this a lot as financial advisors. We have our prospective new clients will come in, or a family member or somebody referred to us will come in, and they'll be well versed on. Let me tell you about my 401k. My portfolio is terrific. Let me tell you about my mortgage. I understand that. Let me tell you about. But they don't know what they've got in terms of life insurance, and a lot of times, life insurance policies that have been ignored in a drawer are literal time bombs financially. So there's some things on the screen now to talk about the things that can create risk. One is living longer than any of us thought. A lot of life insurance policies were issued years ago where they endowed at age 70 or 80 because that was extreme elderly. And today, people don't think of 70 or 80 as extreme elderly. There are situations where premiums don't have to be paid again until you're 87, and people go, "Oh, that's great." And then they turn 87 and go, "Uh-oh, we got a problem."
Mhm.
Or the premiums escalate and you get to a point where the premium is now so much that it's not a good deal. It's not worth keeping, or you have to make changes to it. If a policy matures at 95 or 100 as displayed on the screen, sometimes that means it endows and you actually receive your own death benefit while you're alive. And before you celebrate and say, I win, that's a taxable event, not a life insurance event. So that's not necessarily a win. Some of them mature and that means they expire. That's also not a win. You've paid premiums for 40 years. You've outlived what you expected to outlive, and now your family or your business or your charity or somebody's getting nothing. And then this underfunding, holy cow. You see so many folks who have these policies where the premium should be $12,000 a year and they've been sending 3 for all this time, and that will eventually catch up with you. Where yes, you might still have a death benefit in place for a while, but now you need to put in 30 or 40 or 50 or $100,000 to keep it. And most people don't want that conversation. And as a financial advisor, you certainly don't want to be the reason for that conversation. So if we have advisors watching, please do an audit once a year and make sure you're looking at these. And for consumers, make sure your financial advisor is going over this with you, or your insurance agent or the carrier or somebody, because it is not plain vanilla. What I miss?
No, I mean, I think you really you took care of all the items on the side, and I will say in our practice, we see it on a daily basis. People are living longer than expected. Maybe they purchased a policy in the 80s, 90s, early 2000s, and they're living into their 80s, 90s. I just recently worked on a policy on a 100-year-old, where the expectation was she was going to continue living for a number of years. The premiums had become for the family exorbitant. They couldn't afford it, where they were looking at the life settlement option as a better option than surrender or lapse. So I think really paying attention to the insurance, running those illustrations can be quite meaningful, recognizing and understanding the product that they have, that there are policies, especially those written in the 90s or probably before 2006, that actually terminate at 95 or 100, that if
Mm,
people are living too long, people living longer in many ways is wonderful, but with these life insurance products, some of the older ones, they do terminate. Um, and I think also what I see, for those clients on the phone that have their insurance and, they're looking at it and say, well, I can afford it. We're seeing a lot of clients that, they are living so much longer when they're living into their 80s or 90s. Their beneficiaries are now in their 60s, 70s in some cases for policies maybe owned individually or sitting in trusts, where they actually use the life settlement option as an option to create wealth transfer earlier in life. So,
mm,
there's many of the need-based sales that we've referenced, these at-risk policies, but we do see lots of clients that are taking advantage of the life settlement market with the opportunity of creating certainty today, with the opportunity of wealth transfer while they're living versus after they pass away. So, I think keeping this life settlement option as an exit strategy on your radar, whether you're an advisor or you're the actually policy owner, gives you choices, gives you
mm.
options, understanding your risks, maybe mitigating some of the risks that are on the screen right now, but also creating opportunities and ways to add value with an asset, again, that was maybe bought for a particular reason where that reason has changed or shifted or, decreased in importance. That, there's new things that are maybe more interesting or more valuable being able to use the life insurance policy today.
I know we're accepting questions in the box. If you have some, let Hannah know. I'd be very curious to know if anyone on this program has ever had a conversation at their water cooler at work to brag about the quality of their life insurance. It's just not something people talk about. You're going to talk about your stock or your fund or your real estate or whatever, but no one talks about this. And yet, some of them can be incredibly high performing. So here is some staggering data that I find remarkable that only about half of Americans own life insurance at all. And all of us have a human life value. And it shocks me that only a little more than half do. It also shocks me that most of the life insurance that people buy never pays anything. It never pays a claim. The term insurance, if you buy 30-year term when you're 28, under most circumstances, you're gonna see your 58th birthday, God willing, and then that's gone. You're never paying anything. Or UL policies that either get surrendered for lack of cash, or they get, downgraded, or they expire. You mentioned some stuff that expires at 95 or 100 or 105. And so most of these policies don't pay. The only policies that I know of that pay a claim no matter what are whole life policies, which happens to be one of my favorite strategies from a tax perspective. But there are lots of different ways to do this and lots of different reasons to own different kinds of insurance. But to own insurance that doesn't pay a claim is a little bit frustrating. Now, on the flip side, I don't know about you, Jamie, but I have car insurance, and I did not buy it so that I could go crash into something and try it out.
That's right.
So sometimes it's okay to have insurance that mitigates a risk but does not pay a claim. That's all right. But in this case, most people buying life insurance are anticipating that there will be a claim paid, and most term and 85% is interesting because I've seen numbers that are higher than that. I've seen people say that 98% don't pay a claim because they're either converted or lapsed,
Mhm.
which is a huge statistic. W What do you tell folks well, I guess I know what you tell folks. So tell us, what do you do so that if there's not gonna be a claim or if you're not holding it, we're gonna go through some case studies here. And actually, I'm gonna jump ahead, James, because
Sure.
we're having some fun. So let's talk about the settlements themselves because this is your bailiwick, and so who? Let's talk about the who.
Yeah, and I think to your point, I think what the slide before reminds me of, and hopefully the viewer, is that, most of the policies that are put in place are not going to be held till death. They are going to be surrendered or lapsed or exited. So before that happens, check the box on this life settlement option that we've kind of touched on throughout the presentation today as an exit strategy. The life settlement market today is purchasing policies on all age insureds, but usually a focus on retirement age insured, usually insureds over the age of 70. It will purchase on all policy types, whether it's that rented policy or that policy that was purchased, that buy policy we described earlier, but really a focus on universal life products or convertible term to universal life. Something else to realize is this market serves all socioeconomic levels. The market will buy $100,000 face amounts, it will buy $50 million face amounts. So when we think of those stats on the previous slide, that the majority, 88% of universal life policies never pay a death claim, 85 as high as 95% of term policies never pay a death claim. Before those policies are just terminated, making sure that this option is explored might create hundreds of thousands or millions of dollars for policy owners. So again, paying attention to the life insurance, realizing there's this regulated market that will purchase existing policies can be quite meaningful, and have an impact on all different types of planning, whether it's, estate, tax, business, charitable planning.
How are policy loans treated in a life settlement? If someone has borrowed against their life insurance, does that need to be repaid before a settlement can happen?
No, most of the capital that's buying today will purchase the policy with the loan on the policy. So there's no need for purposes of sale to pay back a loan. I would say 99% of the time, buyers are willing to purchase the policy with the loan on the policy. That will be documented. There are revenue rulings. There's a 1099 LS that actually captures the sale price as well as any loan that would have been on the policy at the time of sale. So that's something that would be recognized, but no, policy owners don't have to pay back loans to sell a policy.
All right. So for people who are watching, if you're over 70, this is something to start thinking about. If you have parents or grandparents over 70, this might be a family conversation. Not that you want to do it necessarily on Thanksgiving, but just in general, they may be sitting on assets they don't know about that can help with their quality of life, with their quality of retirement, with their desire to travel or their desire to do philanthropy or any of the things that help make life easier, more comfortable, more financially secure. All of these things exist. So if you are in a family with living parents or grandparents, this is an asset worth discussing and figuring out. And I think there's lots of winners here and rarely a loser. So long as it's done well, it is fair market value. So you're not giving something up. This shouldn't be done under duress. This should be done with a company like Asher who can shop this for you. You don't want to do this on your own. I would not tiptoe into this any more than I do my own dental work. But making sure that you have good representation, not only your financial advisor, your lawyer, your accountant, but also your settlement company, I think is really important. So here's a couple of case studies, and then we want to leave some time for Q&A. But
Yeah.
let's talk
And
about
Eric, maybe
Carlos.
we want to jump to the IDA one. It's a couple down, but we can touch on these
All right.
just real briefly. I just know what in
No,
respect to time.
look,
There's all
all
different
of these.
reasons. Yeah, why people sell. The first example was a policy that was sitting in a trust. The second example was a wealth manager. The third example was a term policy that was converted, part of a business owned policy. But I think, one that is very relatable to many of the clients we work with is the one that's on the screen right now. This was a survivorship where the male had actually passed away. So the market will buy individual policies on a single life. It'll buy a policy that's on two lives called a survivorship. Or if one of the insureds has passed away, so a survivorship with only one living. In this scenario, $1.5 million face amount had 25,000 of surrender value. The trustee got a note from the carrier saying you owe more premium. And the trustee knew they couldn't afford the ongoing premium. It was increasing. They hadn't expected it. She was ready to surrender that policy, give it back to the carrier for $25,000. Instead, she had an advisor that had talked to her about this market, and they made a decision to involve the insured, involve the owner, collect medical records. There's no exam required. And we went to market, and that policy that the trustee was ready to surrender and hand back to the carrier for $25,000 sold in the market for $475,000. Again, no exams required, no blood draws. This was just looking at an illustration showing the future premium, looking at health records on the insured. And through that process of creating competition in the market, so there's in this scenario, what's on the screen right now, we had about a dozen different buyers on our auction platform that we were able to force to compete to purchase this policy, this piece of property. And through that competition, drives the value up to the policy owner. So that's really a visual of this life settlement option, where it can be a solution. Instead of surrendering it for 25,000 or taking the first offer, which was only 75,000, three times the cash value, going through the auction, having representation, forcing these buyers to compete for the policy, that policy sold for 19 times the surrender value. And I think that's really important. There's a lot of information, misinformation, marketing that's out there on TV and online about this life settlement option. Working, Eric, with an advisor like yourself, ensuring that a policy owner has representation, results in the type of offers that you see on the screen right now. This ability to really drive value, and ensuring that the policy owner is receiving the true fair market value for the policy versus just one offer.
Well, and not taking that first offer at 75, to say,
That's
"Oh,
right.
it's triple, I'll take it." It would have been very unfortunate decision making.
Yep.
So this is a great example of some buyers on the platform saying, "Nope, this isn't in our risk profile," or "This isn't what we want," and others saying, "Yes, this is," and willing to pay. Now they paid 475 for it, and at some point we'll collect 1.5 so they can determine the ROI on that investment as part of their pool. But at the end of the day, this widow at 84 walked with almost $500,000 instead of table scraps for a policy that size that they had funded for all those years. So it's a great case study. And I know we skipped over some other case studies. There are lots of examples of ways to do this. But I do want to make sure that we get to, and this is just another way to look at what just happened, which is the 75 to the 475. We are whipping through some stuff. So let's close with a couple of key takeaways, and then I may put you on the spot. Just I have to think about this. I'm contemplating quizzing you on something. I haven't decided if I'm going to yet. This is live, and a lot can go wrong. But the big takeaways from today, hopefully, number one, life insurance, it's an asset. It should be managed like any other asset. Do not buy it, stick it in a drawer, and hope it's fine. It might be, it might not be. The next thing is don't ever basically lapse or surrender a policy without knowing what you own. That's like taking a treasure that you find in the basement and putting it in the dumpster before you have it appraised. It might be a Gauguin. And then the third thing is work with somebody who understands this stuff and who represents your interest, much like a real estate agent where you have a buyer's agent or a seller's agent. Here, somebody like Jamie and her firm will be your agent and will represent you in this deal. And that's really, really important that they don't represent the counterparty. They are not a counterparty to this. You're not selling this to them. They are helping you get top dollar potentially for what you're doing. Anything else? I mean, I feel like if people get those three things, then I can put you on the spot.
Yeah. No, I think that's perfect.
All right. So,
Go
s-
at
I'm gonna
insurance
put
is
you on the
really
spot. I'm gonna
okay.
put you on the spot because this is good fun. And I think,
Making me nervous.
well, and I
Right.
should make you nervous. Yeah, I can see this happening, and this is what makes this fun.
Okay.
There are four places of which I'm aware that most American taxpayers can put money during their lifetimes where used properly, it is never taxed again during their lifetimes. This is fun. Life insurance is one. That's the gimme. Life insurance is one place where you can put money. It's never taxed again. I'm gonna answer these for you because I can see you're
Okay,
like,
good. I
oh
gotta get
God,
the life
little eyes.
insurance one correctly.
The life insurance one you'd have gotten. The one is a health savings accounts
Okay.
are amazing tax tools.
Yes.
529 plans are amazing tax tools for lots of different ways. And Roth IRAs, Roth 401ks, amazing tax tools. Life insurance is right there with them. And so for anybody watching this, if you want to read more about the ways to do this, you can go to lowtaxbook.com, and there's a free white paper that talks about those four strategies, life insurance being one of them. And I encourage you to check it out because there's a lot to think about there. And so that's the ebook. Whoops. Am I hitting the wrong button or is somebody hitting it for me? Hannah, what are you doing? All right, here we go. So yes, that's the ebook. It is at lowtaxbook.com is where to learn about these various things. And then we're going to go to another free resource. If I can click, I think more of us are clicking than once. So here is a resource put together by Asher Group. If you pull out your cell phone and you take a picture of this, you will get a free guide that will teach you a little bit more about this so that you can start looking at this with your financial advisor, with your family, and so forth. And I hope you will, because there's money being left on the table, and that ultimately is really unfortunate and unnecessary. So with that, Hannah, what questions do we have in the box?
Sure. So I've got a question here. How do you know if you're spending too much or too little on your life insurance? And is there a rule of thumb that you should go by?
I despise rules of thumb. And the only reason I say that is because one size never fits all. And so anytime you quote a rule of thumb, people are like, "Ooh, I'm over it or I'm under it," and maybe they should be or maybe they shouldn't be. I think no one should be insurance poor in the same way you shouldn't be house poor. You shouldn't be poor at all. So if your life insurance costs are onerous to you, if they're causing you to have other financial difficulties, then potentially you've overshot that target. And so that needs to be thought about. In a perfect world, some of your life insurance is flexible in terms of how you fund it. So that if your income goes up and down periodically, there are ways to resolve that so it's not an issue. I don't think anybody could ever spend too little on life insurance. It would be lovely not to have that expense and just to have the policy for free. Sadly, that's not generally the case. Jamie, I'm not asking you for a rule of thumb. I'm diametrically opposed to it. But anything else in terms of how you know whether you're overpaying for life insurance?
What came to mind for me with that question was, the importance of properly maybe shopping for insurance for the individual, making sure they have representation in that market as well of new insurance products that are being offered. The answer isn't always to answer an ad on TV or a commercial online. Working, Eric, with a specialist like you that has an open architecture and firms that you partner with that allow you to present multiple quotes at likely different costs or factors that influence, right? There's certain policies that are more expensive that actually build cash. There's other policies that are much, much less expensive, very efficient, but maybe only serve the protection needs. So I think to that person's question, working with your planning team or evaluating your insurance need on is it just for protection to replace debt, replace income, or not replace debt, pardon me, solve a debt issue, pay off debt, replace income, or is it for some other purpose? I think you have to understand that and then make a determination on the dollars you're going to allocate based off the product that helps solve maybe those protection needs or the cash accumulation ones and tax efficiency you might be looking for.
So step one is to take inventory. Figure out what you already have and how it works and how you can maximize it or utilize it or change it if need be, and then find what's out in the marketplace. Because if you haven't bought life insurance in 15 years, the product lines, everything is different. And that's true throughout history. There's product innovation, there's pricing changes, there's mortality cost changes and other things. So again, don't put it in a drawer and forget it. What else, Hannah? We've got about 5 minutes left.
Does life insurance make sense for me to think about if I'm single with no kids?
I mean, it always makes sense to think about. There's no immediate need if no one is going to suffer financially in your absence. But if you're a young person and you're contemplating whether marriage or kids or some of that might be in your future, family or other things, Jamie mentioned insurability earlier. We're never younger than we are right now. And most of us don't get healthier. Some do, Most don't, but none of us get younger. So if there's a potential that you may want something like that in the future, there's some really inexpensive ways to get your toes in that water and then to have something potentially convertible when your life changes. It does not have to be expensive. I would say generally, if that's true, do this independently and not through your company, because most of the time, if there's life insurance available for purchase through your company plan, and a lot of us get it for free with our employer, but if you're paying for something through the company plan, a lot of times it's not portable, meaning you can't take it with you if you change companies, and a lot of times it's not convertible. So it's really truly just rent for rent's sake. As a single person with no kids, that makes no sense. So you wouldn't buy up your company's life insurance. But in terms of protecting insurability, I happen to think that everybody with a Social Security number when they're born should have some form of life insurance, not only for insurability, but because it's a good asset to own. And, when my daughter was born, it was one of the first things that I did. We started a 529, we started a life insurance program, we started all these kinds of things. But before she was able to say her first words, she had some of these building blocks in place, and I anticipate they'll serve her for life.
Yeah, I agree. I think protecting insurability, all of our, I think, plans are not defined, if we're in our 20s or 30s or even 40s. I have girlfriends that started families in their 40s, had others that started in their 20s. So I think just protecting your insurability, with childhood diseases, with, adult diseases that can occur in life. If you should need that protection in the future, it's nice to actually have it while maybe it's affordable, inexpensive because you're healthy versus trying to get that type of protection later. If there was a change in health or as we age, insurance gets more expensive.
Well, and I don't want that to feel like blanket advice. It's not. There are some people out there who are single and without kids who should not buy life insurance today because they're paying off student loans or they have other financial
Sure.
obligations or they're having trouble making ends meet. This is not one of the first things you're going to go to in that scenario. But if you have the bandwidth, if you're already saving for retirement, if you're already doing the things you need to do to put money away, and you want to preserve your insurability, I don't think it's a bad idea. Maybe one more, Hannah.
Sure. Here's a question. What is the most common mistake people tend to make when dealing with life insurance?
I would say surrendering it without knowing. I mean, dropping something that you already own that's got value that you don't know about is probably the biggest mistake we see. How about you?
Yeah, I was saying, especially with the universal life products or the term products, not understanding, the future obligations or the rights of the policy, underfunding it, I would say is a major issue. We work with lots of clients that actually want and need their insurance, but they can't afford it because it was not funded properly from inception. So I think just paying attention to it is, a mistake. Not paying attention to it, I should say, is a mistake a lot of policy owners make. They do. They buy it, they shove it in a drawer and forget about it. Um, so I think that, funding insurance properly, if you need it and want it is really important. And a lot of people don't do that correctly with especially the universal life. Whole life, I think, Eric, to your earlier comment, um, if you pay the premium as designed, 100% of the liabilities on the carrier, you will get that death benefit. Universal life actually gives some of that liability to the policy owner, allows the flexibility. But if you underfund that policy for the universal life, um, at some point you have to catch up. And if you don't have the money to do that, it can be a problem.
Sage advice. Our contact information's on the screen. I'm going to jump back to that QR just in case anybody missed it. If you missed it, bring out your phone, get this resource, learn more about if you want to sell your life insurance policy or just to learn more. And please go to lowtaxbook.com and read a little bit about some of the tax strategies, including life insurance, that have helped build wealth, not only for myself and our family, but for lots of clients too. So with that, Jamie, thanks. I mean, we're making a habit of this. Backed by popular demand, you are literally the only person we've ever done a webinar with who had enough demand that we had to do it again. So to that, I thank you and I tip my cap, and it's always a pleasure.
All right. I look forward to being invited again. It was a
So,
pleasure.
sounds good. Take care, everybody. Have a
Thanks.
great day. Bye now.